All right, welcome everybody. We've got a special live stream today at a later time than usual. Thanks for those of you who saw our announcement and popped on in here. I'm here with the founder of Santiment, Maxim. Maxim, how are you, my friend?
Good evening. Thanks for joining, everyone. Glad you found the time on Friday, if it's your evening or morning. Doing well. Spent more than usual the last few days time analyzing the data as you expect it to be when the market moves finally in some direction, not just mostly sideways.
Yeah, there's been a bit of impatience and a bit of a lull in the market really over the past week or so. We got off to a strong start in 2025, nice little rebound. Bitcoin actually reached above 102K, which is amazing. And then we kind of just faded all the way back to the low 90Ks where we are now, with Bitcoin sitting at about 93.8K, down about 3.2% the past week. Ethereum really dropping hard, down 8% in the past week. Traders are eyeing that $3,000 support once again. And as we go further down the market cap line, we see larger and larger losses. So this is kind of a stage right now where the smaller the altcoin, the more at risk it is for big retraces, just as the opposite was true during the bull market. The more speculative the asset, the richer the reward, because everything was thriving. So now we're seeing what many people call the regression to the mean, where what goes up must come down kind of thing. And the more obscure the altcoin, the more worrisome it's kind of looking. So naturally, there's been a bit of a draw toward Bitcoin and the blue chip assets where it's relatively safer, than the latest meme coin on the block, so to speak. So that's kind of what the status has been throughout the first 10 days, or most of the first 10 days of 2025. There's a few exceptions. BitGet has benefited from merging its two native tokens, so that's been a story. SUI, which was kind of a darling in 2024, it's up about 6.6% as one of the few gainers here. But Maxim, have you noticed any trends in terms of specific prices of specific coins, anything that looks like it's decoupling or was an interesting story to you?
There have been, there was interesting stories in terms of how you can use it to spot the tops. SUI is one of them, been quite dominant in crypto-related channels, mentions of SUI. Then I remember Aave and Chainlink got quite an increased level of conversation and two positive expectations of what should come. It's anecdotal, always comes around the tops. If you want, it's a question subject to your judgment. What is too positive? Yeah? And this were leading, surprisingly, not Bitcoin, of course, Ethereum. Ethereum is now mostly for jokes that you will never get even 4,000 anymore. And the current decline, we still need to wait for the narrative which would solidify expectations of lower prices, and for us would be a sign saying, okay, now the bottom is in. We'll see. Maybe today's release of non-farmer payrolls and looks like there are now quite some conversations around the rate cuts. There will be rate increases, hikes. If it really gets as a narrative, I can believe, market would trust into further price sliding down, and we might have bottom. Yeah. But we'll see. So I'm waiting, in a sense, for major narratives, which after a few days of quite sizable decline. It's not a crash, but sizable decline. The narrative should be rationalizing this decline. I haven't seen it. It might emerge today.
Yeah, and as you mentioned, some of the economic factors like rate cuts, it makes me think of what we were discussing just before our live stream started, um, which is kind of the economic factors, the buy the rumor, sell the news effect, where, we, for the final quarter of 2024, we were on this huge rise, lots of euphoria as people anticipated Trump being elected. Then Trump officially got elected. And remember, just like with ETFs, there was a point in which ETFs were approved and then the ETFs actually launched, right? And that was kind of the same thing with the Trump election. He was elected in November, but his inauguration actually starts in 10 days. So many people are kind of sitting on the sidelines waiting for that inauguration to be made official. I would forewarn that's kind of a, barring some horrible event, a foregone conclusion in 10 days when he takes office. And people who are kind of assuming that all of a sudden we see this huge bounce may be let down, because remember, the reaction to him being elected already happened. And many could argue that the price action that took us all the way to Bitcoin going over 108K occurred back in November when that happened. The reaction allowed the momentum of Bitcoin to go up, and then we sort of started to see this sideways action once we got there, with right around December 15th being the true all-time high date, almost a month ago now. So the US is definitely still on people's minds and leading kind of the charge. And we're looking at this chart showing the correlation between Bitcoin and the S&P 500. That's what these green and blue lines are. I'll hide gold here just so we can really focus on these two. And you can see how tight they've really been fluctuating since right around mid-November here. A few divergences here and there, but for the most part, they're going up and down together, especially right now. The stock market was actually off yesterday in recognition of Jimmy Carter dying at age of 100. So they wanted to show respects for that. But with the S&P back on, we're kind of down today in the stock market as well as in crypto. And I think in crypto, we're all kind of watching to see that not just the US stock market, but world markets start to pick up steam again, because they had one heck of a run in 2024 and even the last half of 2023. So that's one of the primary things I think is worth watching at the moment. And of course, whales are going to give a little bit of a hint as to how they're anticipating this year will go. And that goes for both crypto and for stock markets, which is really cool. So we can actually see this line isn't just representing, the whale's perspective on crypto. Oftentimes we see this line go up and then stock markets go up, which is cool. So yes, there's a lot of overlap between 10 plus BTC wallets as well as those institutionals that are driving the S&P 500 and all these other world indexes up and down. And lately, we saw the peak kind of occur here on December 27th, and then we saw the 10 plus BTC wallets actually go down in value between the December 27th and December 31st. It actually dropped a collective 879 Bitcoin, not much, but it is something after we saw this huge trend of just nothing but accumulation throughout the second half of 2024. And after January 1st, we're starting to rise a little bit. Just note that this incline is not nearly what we were seeing during the bull run between October and mid-December. So in short, it's good that they're still climbing. We're not seeing any kind of dump, but they're also kind of more in this hodling pattern versus just aggressive accumulation nonstop like we were seeing. What do you think about kind of whale behavior right now, Maxim? Do you have any thoughts?
I will think about it from a bit different perspective. If we want to have a solid bottom, I would see around this time, or as a reason for bottom, that whales have been accumulating and the profits taking some profits, which should be visible on net realized profit loss. If you will see at some point of time, I'm not sure if it will be visible on this chart, but yeah, exactly on another one with net realized profit loss. Yeah, there we should see it. This is how I want to see it works. If I would add some of still available free resources to build position. Exactly. Yeah. This red spikes on the chart is how much profits is being, or coins which are moved on the network, and how much they're in profit and loss. So there should be sizable movements either at the bottom. Sometimes it happens after we hit the bottom, start recovering. So participants who are in the profit says, okay, I need now to take profits. So they show the signs of worries and concern, or like a higher probability in their way of thinking of the market going down. This is what I want to see. Okay. Whether if the balances will change up or down on the previous chart you shared, it's open question. Or maybe like smaller will be selling to bigger. It's also open question, but we should see spikes here. As it's always been the case, as long as I always keep saying, as long as price going up and you see network is keep increasing or showing increased level of taking profits, all good. But the moment you see it on this chart, it starts diverging. And on the top, shortly before New Year, there was a divergence. You can see it that it's just now it's okay. Now when the price go down, it's typically there will be some time and diversion taking profits. But when we build this exactly as a slice spike, was the 25th, I think, of December. See, people took less and less profits, and they didn't do it until we hit this temporary bottom. So in this chart, you see, if you know how to look into it.
So yeah, essentially, I've started to understand it more as we've talked about network realized profit loss. Uh-oh.
Do you have a robot? Do you have a robot in the house?
Test. Any difference?
Still a robot. Robot. AI attack, yeah.
How about now? I'll try one thing. Test.
Robot everywhere.
Oh, I figured it out. How about now?
Oh,
perfect. Thank you, guys. The robot has gone back to hibernation. So yeah, over the past year, when we've talked about this chart, I've really started to understand how Maxim's describing this. And essentially, as we climb, as long as we're seeing higher and higher realized profits, that's a good justifier that we're in this bull cycle and the price momentum can continue. But once we saw right here, right, where we saw prices continue to go up, we eventually get all the way above 108K, but you see how the realized profits are lacking compared to what we saw here. That was a warning sign that we're getting close to a top. Is that about what how you'd summarize it, Maxim?
Yes, yeah, because it reflects on the on-chain activity, the feelings of the token or Bitcoin holders in this case, who are in quite deep profits. As long as they're kind of concerned or need to do something, we are more or less safe. We need to look into other indicators too, of course. This way comes into the game what you mentioned, who is accumulating, do we have a general distribution. But this chart, at the moment when the market declines, I like to see it. When we will have, at least on the level of last sizable spike here at one. I mean, a few days ago, there was quite okay. So we need to have it more, like this one or two more, then it's good.
Mm-hmm. And the other macro chart that comes to mind when we talk about realized profit loss would be mean dollar invested age. And this is a similar longer term indicator, but what it essentially does is the same. It gives justification as to whether or not we are still in a bull cycle. And we can see throughout this rally, really precisely when we saw the bottom in the first/second week of October, the mean dollar invested age line, I'll just hide this to make it easier, this started to decline considerably. And a drop is a good thing because that's indicating that the average coins on the network are getting younger and younger. And this works for any altcoin, not just for Bitcoin, but we're using Bitcoin because of its overall macro indication for all of crypto. And we can see throughout this bull cycle, the average age of each Bitcoin went from about 525 days to 418 days. That's more than a 20% drop. So essentially, this is saying that the older large wallets out there were constantly moving their coins and circulating them back into main, transactions on exchanges, things like that, that allowed Bitcoin's activity to increase, thus perpetuating higher and higher prices. So basically, this part from early July to early October, we saw a bunch of sideways action because dormant and stagnant wallets were just continuing to hold on to their coins and not move them around. But once the movement started, you saw the instant impact as to what it did to the price. Even when we saw this drop, if you were looking at this little retrace here from November 24th to 25th, and you saw that the mean dollar invested age line was just continuing to drop, that would be a good sign that a rebound was probably coming around the corner. And indeed it did. We eventually saw that 108K all-time high. And even after that, what's encouraging to me for the long term, over the next couple months at least, is we continued to drop through the end of the year. Yes, the yellow line down here, it's risen a little bit. I understand, but this is not really much. It doesn't look like we're suddenly back in this dormant state. And I would, we might see another little drop after Trump is inaugurated. There might be some reactions to that. Institutionals changing strategies around again. Who knows? But I still like the fact that over the past 3-ish months, we've really dropped considerably, and there isn't much of a, turnaround in this line. I'm also looking at supply and exchanges, which continues to look solid. Lots more coins sitting in cold wallets versus exchanges, which in theory should be good because it means there's less risk of a future giant sell-off. We were sitting at about 9.94% of Bitcoin on exchanges back in late July. Now we're down to 7.69%. So as long as this line keeps dropping, that's theoretically good for Bitcoin as well. Now, on the alternative, if we looked at Tether, for example, we actually want supply to be moving to exchanges because that means there's more dry powder and ways for purchases to be done to allow crypto to go up. So if I go back to that same chart, notice how the supply and exchanges has been mostly looking pretty good, especially right after literally the day that Trump was elected on November 5th. We were sitting at, it looks like, about 42.36% on November 5th. Now it's way up at 53.87%. So 11.5% more Tether sits on exchanges versus about 2 months ago. So that's a big change to me. And I think the setup long-term still looks pretty good. Just be aware that over the short term, and we'll get into sentiment now, the crowd can have a lot of dictation on when we start to surge back to 100K and beyond in terms of Bitcoin's market value. So I've got a chart prepared, so many tabs that I pulled up ahead of time here. This chart represents the positive versus negative sentiment across social media, just the overall comments according to Santiment's algorithm that is able to decipher whether someone is bullish or bearish based on their wording. And essentially really high spikes like this indicate a high degree of FOMO. Really low spikes like this indicate a high degree of FUD. You want to be rooting for FUD because that means that the retail crowd is selling off and they're having a lot of doubt. And that's when whales typically can pump prices without much resistance. This huge spike was the anomaly because this was the day Trump was elected. And this was kind of the buy the rumor reaction where the crowd got it right because institutionals and retail both agreed that this was a bullish outcome for crypto, and then whales pumped prices as retail took advantage of that. So basically just more money was put into crypto at a very high degree here. But other than this exception from a real world news event, this indicator has been pretty helpful. We had a pretty much a top on November 20th. We had a top on December 4th. We were close to a top on January 3rd, a couple days before that rebound to 102K mark. And then we dropped back down, and the sentiment has been rather neutral ever since. I'm still looking for signs that the crowd is getting a little bit antsy, which I think there have been moments just this past week. And, you know, if we draw a line, I'd say roughly this is about the average of the past 3 months or so. And we kind of have been below that mark for most of 2025 so far. So as long as we're a little bit below, that means that we can probably see a bit of a rise without much resistance, meaning this is a better time than average to jump in. And if we look at MVRV, which supports that chart, we should see that it is a little bit on the negative side right now. Here we go. So 30-day MVRV, you can see that the average wallets that have been active in the past 30 days, they're actually seeing a return of about negative 4.7% now. Anything below 0% means that you would be buying in or adding onto your position at a decreased risk compared to the usual time in the history of crypto. In a zero-sum game, you have better luck mathematically buying in when the average trader is down money, or there's blood in the streets, as Warren Buffett likes to put it, rather than the average traders being up money. You can have exceptions. You can buy in here, see a little bit of flatness, and then prices continue to rise even when MVRV is in positive territory. I get it. But if you go back long term, let's say we look at like the past 4 years, and I'm going to change this to just daily. So give me one moment. 30-day and 365. Put these on the same axis. So yeah, if you're buying in when the short-term and the long-term MVRVs are way, way high, you're doing so at a very high risk rather than people who are taking a chance and buying in as the crowd was way down, like during this FTX collapse. If you remember, many people were declaring crypto dead during this point. In hindsight, they're kind of kicking themselves. I don't think 15.8K was a time you should have been selling because you're up about 8 times your money now. So in short, you want to be buying when you're seeing extreme divergences on the negative side for either the short term or the long term. And you want to be a little worried if you're buying, you know, here, especially once we got into December and the MVRVs were still positive. Good sign that we were probably going to see a natural correction. That's what we ended up seeing. And now at least the short-term MVRV is in negative territory, even though there's still some risk with the 365-day MVRV being a little over 18% right now in the positive. So based on the social end as well as the on-chain end, I see more long-term positive as we get into 2025 further down the road. For the short term, though, maybe we can look at something like liquidations and a few other charts that you had in mind, Maxim, so we can get an idea of how next 1 to 3 weeks.
Right. Before we go further, be careful with this indicator. Or not careful, don't give up if you start using it, because the definition what is high is low very subjective. Yeah, but
True.
Yeah, and it's we can always you see in the hindsight, okay, it was high. Oh, wow, it was so low. But then you say, okay, how can I use it in the present moment? On this alone, or this indicator alone, you cannot. Very difficult, hardly. But in combination with others, yeah, it just gives you on average how much in the profit on average hodlers are, and you can assess level of your risk. Yeah? So it's become part of your decision making mechanism. On this alone, there are a few indicators which are almost like you can use them alone. Almost. This is not the one. On this alone, very difficult. Yeah, you can use maybe for rebalancing. You're balancing if you manage a portfolio and you want to move from one asset to another. Maybe in this case, I think we used in the past for this kind of index rebalancing. Yeah. Just additional information. It's a very cool one. We like it a lot, but it's a part of the whole framework. Yeah.
I agree. I think this is more of a risk tolerance / long-term indicator where the extremes are really the times where the MVRV comes into play. But when it's just barely negative or just barely positive, I agree that anything can happen because we've seen such huge extremes where, right here, for example, just because it's slightly positive doesn't mean that's where the top is coming. Sometimes it takes something really, really, really high, which doesn't happen very often before the MVRVs here are one of the, primary things to identify the precise tops and bottoms. So 100% with you, Maxim. Why don't we talk about the liquidation chart that you had sent over to me ahead of time?
Yeah, it's a good one. Even with some text, I wrote some explanations.
Yeah, let's look at that. So I'll narrate here. This represents this template, the lending and borrowing rates. We can see how the cycles of overheating and cooling down are happening based on the lending and borrowing rates on Aave and Compound. Namely, we first observe the price of the money, what you can get in DAI, DSR, Aave, and Compound for your stables. Here you'll notice the cycles of heat, cooling down, and a kind of winter. During hot times, the rates for stables are very high, obviously above 10%, often spiking all the way up to 15, 20% even. This is high risk area. The top is being formed. The bottoms are formed once we get down to normal rates. They're about Fed rate plus max 2%. To further analyze the market dynamic, we have the events of repayments, which is where the market participants feel worried about their borrowed stables, and also liquidations, which is where the real pain is being enforced on the market participants. Without the pain, there's no real bottom. So what we're essentially looking for, if I'm understanding correctly, Maxim, is pain points.
Exactly, but it's not
here.
First is just the general price of money.
Okay.
So current rate on MakerDAO saving rates or Sky saving rates still 11.5. So we are a bit too far away from pain. Scroll down. Yes, the total level of debt also still high, even though declining a little bit. Yeah. Lower. Yeah, this is just lending rate you can get on different platforms. Yeah. And now here comes, next one. Because I have many different assets. Yeah. This is where you start getting levels of pains and you can compare where now. Yeah. There was one, it was enough to recover at that time. And in the past, you see it might be even more extreme.
Yeah, especially here in early September, that looked like the primary time where there were some bottoms, as well as early August when we saw that huge dip.
Yeah. So this is what you want to see, and combined with network realized profit loss, which we discussed in the beginning. You remember these red spikes? You want to see red spikes when people start taking profits or moving intensively Bitcoins in profits, and you see liquidations. So it's a very good setup. You can be reasonably sure that the level you're entering is a good one. Still can go sideways or a bit lower, but it will be good level. We are not there yet.
Yeah, I mean, we haven't seen any big liquidations here since December 20th, even though we've been declining. I'm definitely noticing, when we see these big drops, obviously that's going to correlate with liquidations, but not always. So like this one here on December 10th, for example, pretty sizable drop. We went from, Ethereum dropped a little over 12%, but not really any significant liquidations going on here. But this one did. December 20th did mark a bottom. If you bought in right when all these liquidations fired off, you'd be up money right now still. So I see a lot of value here. And I think it's an underrated metric / template, even by myself. I want to do more analysis on this in terms of our content.
Another one below, because I think it's all collateral. Then I separate wrapped ETH liquidations, and the one below is wrapped Bitcoin. So
okay, so on the wrapped ETH end, not much. We go down one more.
Are you sure? Wait, are you sure it's the latest data because it shows 27 December? We're in January now. Somehow it's old.
I'm sorry. There was a 2-week delay. It probably loaded when I loaded your chart from the last point that it was used. So let's go back up, make sure there isn't anything new. In terms of MakerDAO liquidations, Aave, Compound, nothing really special here. On the next chart, not much either.
Yeah, a little bit, yeah.
Tiny, yeah.
Showing up, yeah.
And then same thing down here. There's a few mild spikes just yesterday that were showing up. So that's a good thing. But yeah, just like the other charts, the big ones just really fired off in early July and early August during those two respective crashes. Are there any further charts down that might be helpful here?
There are interesting two charts at the bottom, but they're more complex one. If you go to the very bottom.
These two?
They're related. Yeah, exactly. They're related to Ethereum environment or ecosystem with USD and stake USDE. And the interesting part, actually, I'm surprised to see it. Need to think what it means. Percent of people who are staking their USDE to get a stake USD. It's a kind of showing belief that market can go up and there will be high founding rates in a sense. So looks like there is not so much belief anymore. Or let's say it's corrected a little bit. Still not on a healthy level, it should be lower, like around 50%. But this is a chart if someone interested in a deep analysis of yield and expectation of further yield, you can look into it. Yeah, these two charts can give you quite a interesting insight. But probably we shouldn't go into the depths now.
Okay.
It's a very broad topic here.
Gotcha. And maybe we take a look at the social trends dashboard and see what's going on here. We've got trending words, obviously, on the West Coast where I am. The fires have been a big part of the narrative, and it's trickled over into crypto for sure. People are worried about their homes and their livelihoods. So it's had a lot to do with people's kind of passive approach to investing right now, especially from Californians. But that's the number one trending topic actually right now in crypto circles. You've got things like market insight, fire as opposed to fires at number 3, unemployment, which is interesting. So people are talking about the job market right now in a positive way, indicating a lower unemployment rate of 4.1%, suggesting a strong labor market, influencing investor sentiment and Fed Reserve decisions. If you remember the top that happened on December 15th or 16th, that correlated with the Fed talking about the interest rates, and they did cut on the last FOMC meeting, but they did so with Jerome Powell mentioning that the Fed rate cuts would soon be drying up if they hadn't already after this last one. And that was kind of a hawkish stance that a lot of people got worried about because they thought that, or at least going into that FOMC meeting, people thought that the Fed rate cuts would kind of continue into 2025, and we'd continue to see decreases there that would benefit the economy and therefore crypto. But I think this is an important topic, and we'll get into it more as the next FOMC meeting comes up soon. If the job markets and the inflation are looking to justify more rate cuts, that's going to be objectively good for crypto markets. But if we start to really dry up and Jerome Powell says, all right, we're good now, no more cuts or increases, we're just going to leave it as is, that might disappoint traders who were kind of anticipating that this year would be full of cuts. So very important topic there. Unemployment, payrolls, definitely related. Friday market. I don't know what Pippin is. And Litecoin here at number 10 is also interesting. Pippin's trending. Yeah, so it's mentioned related to the crypto token, shown significant price increases, outperforming the market. Let's take a look really quick. I don't even know if we have Pippin because it's pretty new. We do. Oh, it's so new. Shout out to our developers who have data for brand new assets like this right after they're launched publicly. Let's make this 1 day. Yeah, it looks like we have data just over the past 5 days. And I make this a line.
You know this coin, Max? It's one of the CIs. Pippin. Why Pippin? Okay,
There's a player in the NBA. I don't know if it's related to Scottie Pippen, who's a famous athlete from the Chicago Bulls in the 90s. But regardless, yeah, I mean, since this bottom on January 8th, the price has gone up 590%. So I can see why people are talking about it, trying to jump on one of the few assets that's been exciting the last few days. But yeah, we don't have on-chain activity yet on it. But in terms of social, I'm just curious if we can find a few interesting charts for you guys. Let's add social volume. Nope, don't even have social volume yet, but we can look at the mentions of it here. Or not. Maybe it's too new. There we go. So if we just look at the last week, so this is a pretty nice little chart here. Look at how the social volume really exploded yesterday, right at the top. Now it's starting to come down. I would anticipate that we keep seeing a bit of a retrace until the crowd becomes disinterested again. It might crash so much. We've seen a familiar pattern where the social volume dries up as the price declines, and then all of a sudden the social volume rises again as the price is really plummeting. Let's say hypothetically it comes back down to like 11 cents here, and then we suddenly see a big spike. That would indicate that the crowd is talking about it negatively and they're saying, oh, Pippin's a scam. I knew it. Rug pull. Should have never touched it. And as that FUD comes in, that would be a time to buy once again. And we see a bit of a rebound. Maybe it's a short rebound, but that's kind of the way to use these kinds of charts. But I find it not so coincidental that the crowd really FOMO'd in here and then the price momentum completely dried up. Another thing on the social trends dashboard would be the trending coins tab. And wow, we can see Pippin is the #1 trending coin as well. Yeah, I mean, I don't want to spend too much time on the specific news here, but Litecoin at #2 is fascinating. highlighting transaction fees. So it's being compared to XRP right now. Conversation reflecting a mix of skepticism and optimism. And this isn't a coin that's seeing, a crazy price breakout or anything. It's just seeing an increased level of discussion. Growing adoption and utility, positive technical indicators, cultural shift toward privacy coins. If you want to, Maxim, would you consider Litecoin a privacy coin the same way as Monero or Zcash?
No.
Yeah, that's interesting that it says that, because I agree. And then bearish, summary, market dominance concerns, transaction delays. Seems kind of weird that it's trending, but for whatever reason, even though the price isn't doing anything special, it's way up there at the moment. USD 0, Bitcoin at number 4, the coin usual at number 5, even though the price has been kind of flat. Sui, as we mentioned at the beginning of the call, one of the few risers over the past week. Cookie.
Oh, Cookie.fun. Yeah, it was listed today, I think, on Binance or yesterday. Got a lot.
Yeah, that's exactly what it says. The recent announcement by Binance listed Cookie among other AI-driven tokens. I would guess, is Pippin on Binance now? Is that having something to do with it? Binance, anything? Yep, there we go. Significant price movement. Pippin experienced remarkable price appreciation, surging over 400%. We saw it actually was above 500% at one point. Added to Binance Alpha, many investors celebrating substantial gains. So yeah, this is a prime sign that we're in top-ish territory for Pippin. And then even something like Cookie, it hasn't seen the same price action, probably because everyone's focused on Pippin, but it might see a short-term type of surge just for being listed on the top exchange in the world. Just be aware, if Cookie cracks like the top 3 on the trending tokens, let's say over the weekend or on Monday, it might see the same fate as Pippin is seeing now. And then we got LLM, Strong, and Solana at number 10. Solana has been actually struggling quite a bit. If we look at the chart for it, we'll go down to socials because that's what we have for Solana at this time. But hopefully in 2025, Solana's blockchain is one that we're really focused on adding some on-chain metrics. So fingers crossed. I know our devs are working hard. But yeah, you can see the social volume literally spiked right at the top on November 21st. And since November 21st, the price of Solana is down 27% or so. Social volume and dominance, it's seen its share. In fact, Solana is getting more and more social dominance. I'm curious, Maxim, do you have kind of a reaction when you see that prices are going down, but the dominance is moving up like this? We got price going this way. And then, going all the way back to September, social dominance is doing that.
Better read the context. As a matter of fact, there is a new and a better way we show context of dominance spikes. You need to understand why. Yeah. I am afraid it doesn't look good yet. From what I remember, that Solana maybe will come back territory. So dominance of the talks, Solana is not necessarily on declining price. It's like it's all bad. People can keep coming, trying to convince themselves or others that Solana is going to do well.
Yeah. And I would fathom a lot of this discussion isn't all toward Solana itself, but rather the amount of projects and meme coins that have been popping up over the last 3 to 6 months on the Solana network too. So that's one thing about, native tokens or host tokens like Solana or Ethereum, even Toncoin. You know, they have meme coins that are created off of those main host networks, and those main tokens are mentioned just as a side note about what blockchain or network is being used for, you know, Bonk or WIF or, you know, many of the other meme coins popping up. So a bit of grain of salt to this. Either way, yeah, I think Solana's, it's still waiting for crypto to awaken a bit because it's been in quite a slump lately. I'm curious. Oh, actually, I put out an article yesterday or 2 days ago comparing the top 6 largest market caps and how their sentiment looks. So we went over Bitcoin, how it's kind of in the middle here. Just focus on this gold line. The green and red, remember, is the ratio between positive and negative comments. Ethereum, a little on the negative side. And remember, we want to look for negative. So slightly bearish, I ranked everyone from 1 to 5. Slightly bearish is a good thing. That means we are more likely to see a bounce because the crowd is leaning against it. XRP is actually slightly bullish, so people are quite optimistic about the asset. Binance Coin kind of sitting in the middle right now, even after this big retrace that we had just seen. And then here's Solana. I think because of all the discussion that it's still getting, just as we looked at social dominance and the rise that it's seen, even here in the new year, it's still seeing kind of a slightly bullish bias from the crowd, even though it's been on this long slump since late November. So I'd want to see the crowd start to get a little more negative towards Solana to match the price action that's been going on with it as a good sign that you could buy with confidence. And then finally, Dogecoin, very negative right now, like a lot of meme coins, because they've just been hemorrhaging their market caps. Dogecoin has been dropping, but not, you know, to a crazy degree compared to some of the other more obscure meme coins that are really seeing big regressions to the mean right now. But meme coins are an interesting topic. We can look at the discussion rate of meme coins versus layer 1s, layer 2s. Not sure why it can't fetch the data. That's interesting. There we go. Let's take off AI here. Just look at these 3. So pink is the top 6 meme coins in terms of the percentage of discussions going on with it. Purple is the top 6 layer 2s, and then green is the top 6 layer 1s. So you can see the gradual rise in layer 1s, especially powered by Bitcoin, obviously. There's an increasing amount of discussions because people are kind of veering back into the relatively safer coins. And even layer 2s, it's interesting to see how high some of these are. But meme coins, they're on the other end of the spectrum, just very little interest in talking about it compared to what we saw during peak meme coin season here in mid-November as markets were really ripping upward. We saw a slight spike here. This actually was a good bounce, and then it just dropped off again. But I think this is actually a good sign for the long term. We don't want to be seeing a high dominance rate for speculative assets. That's an indication of crowd greed. We actually want to continue to see rises toward layer 1s, meaning people are trying to be a bit safer with their investment strategies. Balresh, I don't assume there are many live viewers right now because of the short notice on the later time we had, but do you see any questions, comments from the crowd that we can address? Mm-hmm. Sure. Let's take a look at what's been going on for Mythos, which is the 336th largest market cap asset. It started publicly trading in late no, not true. Well, it's weird because it has a ton of address activity and network growth metrics going back to early to mid 2024, but the price doesn't start till late November. So let's just look at the last 3 months here. We do see a big rise in transaction volume in the first week of December, but it's really faded significantly. So the network itself is not getting a ton of activity at the moment. Yeah, I mean, the same thing goes for active addresses, just kind of a flat level of action over the past month. We've been averaging somewhere around 85 to 90 addresses that are active on the network per day. Yeah, and like 3 to 4 million in terms of circulation per day. It's interesting. We have some on-chain metrics, not all. Actually, this, yeah, funding rate won't work, but we should have MVRV because it is an ERC20. Okay, so yeah, Mythos has very high long-term average returns because it's such a short-lived asset on the public exchanges. However, on the 30-day scale, it's sitting at about negative 4.5%, meaning it is a little bit under average for in terms of trader performances and what you'd be competing against if you bought in now. I would be a little bit weary though because the long term is so high. You may want to wait a little bit until the yellow line gets a little closer to 0%. Not a lot of whale transactions. Only a few trickled in $1 million plus transactions that have occurred since the public trading started. If I go to 100K, yeah, I mean, whales just have not been active at all over the past week. But we can look at how the breakdown is in terms of tiers. Price is sitting just a little over 20 cents. So if we look at right around the 100K level, let's just merge them together. Any wallets with over 100K Mythos versus under 100K. We'll even break it down and just go 0 to 10, or we'll go 0 to 100, and then 100 to 100K. Only go with these three. Okay. So we want to be seeing the orange line moving up, which it's not right now. It looks like the whale wallets are declining slowly but surely, which is somewhat normal with new assets as we see redistribution to the smaller, more interested and active wallets. The smallest wallets are kind of staying put, and the mid wallets are actually rising a bit. So this is not a bad situation. Ideally, we'd like to see that the founder wallets and the whale wallets are growing over time and accumulating Mythos. But again, I think it's pretty hard to tell with such a short period of time and a redistribution kind of underway as it usually is for the first 6, even 12 months. So we can check back in on this. I'd recommend for the person requesting Mythos, break it down by these 3 tiers, 0 to 100, 100 to 100K, and 100K to infinity. And you'll see some interesting trends as Mythos ages a bit and we see longer periods of time that can be analyzed. Just checking to see if there's anything else. Yeah, we saw during the first few weeks, there was a pretty big dormant movement going on, but it dormant should be taken with a grain of salt when the coins have only existed a few months. Not a lot of realized profits during these rises, so that's not really a great sign. Supply and exchanges is moving down, so it doesn't look like a bunch of people are just salivating at the idea of selling off their mythos. Social volume also on the decline. That's not necessarily a bad thing. It just means it's kind of off the radars of retail traders right now. Not a lot of discussion about it anymore. Very negative. Let's look at it on the sentiment template that I have. Curious to see if there's anything going on here. Yeah, it's very negative. It's just getting very little discussion, period.
Yeah, but it's small quantity. We don't
exactly
track community. So
we're looking at a very, very small sample size, so I understand.
Not enough social volume, yeah.
Mm-hmm. But yeah, I guess it's a wait and see for Mythos. I appreciate the person requesting. If I had to say one thing, the 100K plus wallets declining right now isn't a great sign that we're about to see a rebound. Also, the long-term MVRV, because there was that initial pump, I would wait for that to come down, maybe at least to below plus 50%. That would be a sign that we're starting to get into a justifiable buy territory again. So based on the little info we have, Mythos doesn't look like it's primed for a sudden breakout, unless Bitcoin just goes on a tear and we see profits redistributing to assets like these once again. But yeah, I think overall the picture that we're seeing going into mid-January next week is some long-term upside. Obviously, in 10 days, we have the Trump inauguration, and we can see some wild stuff around there. Just be cautious of the fact that this could be a buy the rumor, which happened in early November, and sell the news event, where retail traders think it's going to be this big event, and they FOMO in on January 20th, and then the whales end up taking profit, and we see a bit of a letdown for a week. So that could be a scenario that plays out, or we just see absolutely nothing and we see a bunch of sideways action. But long term, if you're looking at this in terms of how 2025 looks overall, I still like the way crypto looks based on the information we have now. So any final thoughts from you, Maxim, whether you agree, disagree with kind of my outlook at the moment?
Let's give a chance for prolonged bear market in 25. Too little people talk. Well, there are now a few people talking about it, but I always like to massage an idea if it's not very popular, and it's obviously not popular. What we have this decline, recover, and go lower and lower. Yeah, keep it in mind. For critical thinking, you always need to consider ideas which are not popular at all. And this is one of them. What if big decline started? And that's it. There is no bull market for the next few years. It doesn't matter if it will happen or not, but think about it. And then what will be the metrics which would confirm? And rest assured, if we see confirmation of this idea, we'll come back and share some metrics. Like mean dollar SH, maybe we'll turn again to accumulation mode. And Brian, from the past, that will be quite a negative sign. Yeah. Or
this is true.
Retail start accumulating and they say, okay, now it's the time. We really need to go back to market. We haven't seen it yet in Bitcoin. That's why I agree. There is a possibility for bull market exist. Just for the sake of critical thinking. Consider we started bear market. It will just continue from here. Oh, what an interesting thought, yeah. You just need to be open-minded. Yeah.
Absolutely.
So that when the time comes and everyone, for instance, bearish, but because you're open-minded and critical thinking, say, okay, wait a second, what if it's just beginning of the next bull market? Yeah. That will help. That always helps.
Yeah.
Yeah, that will be the final thoughts. because you ask for them. I give it final thoughts. Otherwise, we're just here every week, or almost every week.
Yeah. Well, I appreciate those final thoughts. It's nice to have your perspective as always. And Balresh, thank you for running the stream. It's great to have you back, and I'm looking forward to getting back into our normal schedule of streaming every Friday, having live comments, and we appreciate all of you who came to watch live, or the vast majority of you watching on replay. Let us know your thoughts, questions that we can address either immediately in the comments or leading up to our next week's stream. But in the meantime, take care. If you're in California especially, be safe. If you're in other areas of the world that are also dangerous right now, same sentiment. And we will talk to you all in a week's time. Take care, guys.
Yeah, take care also, Brian. Have safe time in LA.
Thank you, my friend.
Yeah, bye-bye.
Bye-bye, everybody.